Hey traders, during summertime the market is very weak. Most of the peers, most of the financial instruments are trading in a consolidation. And for you it is very important to have the rules to spot the consolidation. It is very important for you to know how to trade the consolidation. And in this video I will show you my rules that I apply for the identification of the consolidation, and I will show you how I trade that. I will show you the multi-time frame analysis rules that I apply for trading consolidation, the confirmation rules, so it will be a very useful lesson for you. I will show you the stop loss, the target selection, the entry point. So like this video, subscribe to my YouTube channel, and let's start. Alright traders, let's start with the basics right here. In order to trade consolidation, we need to properly spot the consolidation, right? We need to have the objective rules for the identification of the consolidation. And here on Euro Pound, I believe right now we have just a perfect example of the market trading in a consolidation. But why? You can see that the market here is bearish, it is falling. Yes, the trend here is bearish, but here the perspective really matters. Let's just follow the recent price action. From me, you can see that indeed the market was falling. Here are our price action legs. You can see that the price was setting the new lower lows, lower highs. The market was very bearish. Then the price reached that structural low right here, very important psychological point, and from that we saw quite impressive bullish rally. Why this bullish rally is so important for us? Because here, if we look left, we must spot our recent low highs. Yes, here are our recent low highs, and with this bullish movement the price managed to violate them to the upside. The price managed to close above them, and it is a very important clue right here. Why? Because with our rules the market remains bearish while it is trading below the level of the last low high. But here the market managed to violate two low highs in a row. So is it bullish or is it trading in sideways? Here it is trading in sideways. Why? Because after this violation, the price returned back to the level of the previous low. Yes, so for bullish trend, we need the bullish impulse, retracement, and then the next bullish impulse with the new high close. But here we don't have such a price action. Instead, we just have the bullish impulse, then the bearish impulse, and they are equal. So for now, the market here is trading in the range. Yes, you can see that here was our low high. Yes, at some moment the price set the low high right here, and this time the price respected that level. And here is the level of our last structure low, and the market right now is just trading between these levels. Yes, between this resistance and between this support. So now the price is testing the support of this range. So being in a consolidation, trading in sideways, here we can catch a very nice buying opportunity. Yes, so let's discuss what kind of confirmations we can get right here. Hey traders, it is the last chance for you to get my ebook on a huge discount. Until Sunday you can get the copy of my book for just $99. If you want to learn pattern trading, price action, structure analysis, technical analysis, it will be just the best tool for you. On my website vasilytrader.com/ebook you can actually look inside the book. You can see what is inside, so definitely check it, the link in the description below. Or contact me in one of the social networks. Don't miss your chance. Let's start with the candlestick analysis on the daily time frame. What is important for us to note is that once the price reached this resistance, we saw very strong bearish movement. We saw very nice sequence of very strong bearish candles, but once the underlined yellow structure support was reached, look what happened. The price here formed the sequence of two doji candles, and we know that on a daily time frame, on a key level, doji candle is a very strong reversal clue. And let me know, by the way, in the comment section whether you consider doji candle to be a reversal signal or the indecision signal. You know, it is very interesting to know, because for me, definitely here it is a bullish clue, but I know that some traders just treat it as the signal that the market is exhausted. So who knows? Let me know, what do you think? And with this two doji candles, definitely, at least it tells us that sellers stop selling. This bearish pressure that was very strong initially, here it just finished, yes, and for now the market participants are waiting for some trigger. So now let's open lower time frames and let's check what is the situation there. And now we are on the 4-hour chart, and here I see two patterns. Yes, two very nice price action patterns, and it is very interesting whether you see them or not. Let me show you the first one. Here the price is following this falling channel. Yes, you can see that for now the price perfectly respects the boundaries of this falling parallel channel. It is the first pattern that I see, but there is one more pattern. Do you see this pattern? Over here, the price is trading, is forming the double bottom formation. Yes, you can see that here was our test of the low, retracement, the second test of the low, and retracement, and here we have this brilliant horizontal neckline. Have you spotted these patterns? Let me know in the comment section. And definitely we can trade these patterns, and we can apply these patterns as the confirmation of a coming bullish rally on euro pound. So what do we need right here to buy the market wisely? We need the breakout of the resistance of the channel, and we need the breakout of the neckline. So what we will look for right here, we will look for the 4-hour candle close above this yellow area. Yes, above this horizontal area. Remember, horizontal structure is always more important than the vertical structure. And in case if the price just starts coiling right here and violates the resistance of the channel but remains below the neckline, for us, it won't be the signal. We need the double breakout, the breakout of the horizontal structure and the breakout of the trend line. So once the price violates and closes above this yellow neckline, we will look for trading entries. And I prefer to open my long position with the limit order, with the buy limit order. And here my entry will be based on the highest candle close within the neckline. And our highest candle close is right here. Again, it is just the rule. Yes, it is my strict objective rule that I apply for entries. It can be different, but it just makes sense to me. My stop loss right here will lie below the lows of the double bottom formation. Yes, it is a very strict rule. Again, I want the protection. Yes, here with such a stop loss, we will be protected by the neckline, by the trend line, by the support of the daily consolidation. So a lot of supports, yes, to make our position safe. Then where will be our first target? Yes, and in my view, it is for the first target, it is better to rely on the closest strong 4-hour structure. And our closest strong 4-hour structure is the structure shelf right here. Yes, this one. You can see that in the past, just recently, it was a very strong support, then it turned into resistance and was respected multiple times. So with such an entry, with such a stop loss, and with such a take profit level, yes, it will be around 85,735, we can get 1.9 risk to reward for the initial target. But there we will close just 40% of our trading position. And because we are trading the consolidation, then the market can go higher. Yes, the market then can go higher, and the market can go all the way up to the resistance of our daily consolidation range. Yes, so let's measure our potential risk to reward then. My second take profit level will be based on that whack right here. Yes, and you can see that here we have almost 5-1 risk to reward for the second target. So here very nice profit can be made. Yes, and the only thing that you need to do right here, you must be patient enough to wait for the 4-hour candle close. Then you must be patient enough to wait for the retest. Yes, and only then you open your trading position, and then you wait. Yes, also remember that while the price is trading within this channel, within this falling channel, it remains bearish. And in case if the resistance of the channel is respected and the price just drops violating the yellow structure support cluster, then you know our bias will switch to bearish, the consolidation range will be broken, and then the price will most likely go lower following the global bearish trend on euro pound. Alright traders, I hope that with this trading setup we will manage to catch a very nice winner on euro pound. Just follow the rules, just be strict, be patient, and let's see how many pips we will manage to catch there. For more education, for more tips, don't forget to check my ebook, the link in the description below. It is the last chance to get it on a very huge discount. Like this video, subscribe to my YouTube channel, and I will see you next week.